Vindi, let's quickly look at Vindi. Let's quickly look at how you can maximize your wins using trendline breakouts. So suppose we have a move to the downside like that, and you want to take advantage of a breakout of that particular structure, right? Make sure that you have already identified a potential support structure where price, or rather these buyers, are most likely to start accumulating their orders from, okay? Or where these sellers are going to be taking their profits. Because remember, around a zone, this is where those actions actually takes place. So sellers who are in this particular trade, as soon as they see a potential structure, some of them are going to start taking out their profits, and buyers are going to start getting ready to buy from that. And that sort of actions, they create a shift in the market, whereby you find that now buyers, there are more buyers into that, and that's called order flow rather. Okay, so suppose you want to capitalize on this break, this trend line break. How should you do it? That is the purpose of this video. I'm going to be looking at a few other instruments where we actually back test this. Okay, so like I said, identify a structure first. That is the first thing that you have to do if you are in this particular looking at an uptrend and you'd like to actually sell the breakout of that trend line. Identify a resistance structure. Okay, so you should be able to know how to identify this. I'm not going to dive into that now. Okay, so with that given, there are two things that you can do. The first one, obviously, is to take a trade as soon as price breaks out of that particular trend line. This one is very, very aggressive. This is a very aggressive approach, okay? Because most of the times you're going to be subjected to fake outs where price actually breaks out and then it comes back in and hit your stop, okay? Or creates a new low. In the case of the other one as well, which is the bearish one, you find that price now breaks out, okay, and then the next thing, it goes back up. All right, it goes back up entirely. That is the very, very, that is a very, 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 very aggressive, or rather risky way. But the conservative way will be for you to wait for a break and a retest. Okay, so a break and a retest, basically, for those who are new, maybe you're new to this concept, it's actually price breaking out of the trend line that you have identified. Okay, breaking out and it coming back from the other side, and you can capitalize on the first bullish candle that closes around it. That's gonna be your trigger. I've already taught a whole lot of other strategies on the private classes on this. Okay, so a lot of strategies, they're gonna resolve mostly to this, whether you're looking at the Nasdaq 1580 or you're modifying some other strategies that I've shared, the TRTs, they're gonna come back to this particular thing. And I teach more about this on the private classes. You don't have to be part of the private classes. You can simply just watch the YouTube videos that I'm doing. But if you want more details on that, check out the links in the description down here. And don't forget to like and subscribe. Okay, let's continue. All right, so the conservative way, of course, like I said, will be for you to break out and correct, retest, and go back. The first green candle, this will act as our trigger. So we will look for opportunities to buy from that close. Okay, and then hide our stop where? Below the previous low, outside the previous low. That is the most conservative way and the most safest way to actually trade breakout. Okay, let's see if we can do some few examples on that. Okay, I have the pound USD right there. I can see that price is coming down and creating some sort of double bottom here. Let's see if we can identify our trend line. If we move our trend line like that, and then we identify a structure, I believe this particular area here is gonna act as a potential area of support. Let's see if price or these buyers are gonna be able to buy. So you can see that these buyers are failing to push further. They're coming back up. And let's see if we can break above that trend line and close nicely. We did break above. So a lot of people, what they were going to do is they were actually going to take a position right away. They were just going to take a position right away, which is very, very risky. If we're to look at that, a lot of people we're just gonna take a position right away where they will actually move a long trade from here. Let's say place the stop there, and then let's say your target somewhere around that point. But remember, what we want to do is we want to maximize our target or our profits. Let's see how this one goes. So, okay, that will have been a good one. So how do you manage your trade if it's moving like this? Obviously, as soon as it reaches 1:1, as you can see, this is equals to that. This part is equals to that. What you do, you can take partial, you can close some of your profits and move your stop loss to entry. Can you see how I'm moving my stop to entry to lock in some profit? You close your partial profits and move your stop loss to entry as soon as it reaches that particular portion. Okay, so that one will have worked out for aggressive buyers. And you can see as it moves away, you keep on trailing that particular stop. As it moves away, you move your stop loss maybe to this previous low around this. As you can see, there's some sort of structure around that particular point. Okay, so you can move your stop down there, and let's see. It went up nicely, and then you will continue moving your stop loss up. Okay, you will continue moving your stop loss up since this have created a new high to lock in some profits, but already you've closed partial, so you're just looking the remaining. This is the previous low. This is where the stop loss was actually gonna go. Okay, around this point. All right, and then as it continues up or comes down, if it comes down, you're gonna get stopped out at break even. Okay, which is very, 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 very important. There we go. Look at how it did hit a stop and then went up. But if your stop was still down, you will have hit your target nicely. This is a very, very, very nice one. But notice how one could have entered. You have two options. One will have been for you to buy instantly when you see the price closing out and hitting a stop, which is the aggressive way. Like I've said, that is the aggressive way of approaching trendline breakouts. Okay. The second one, obviously, will be for you to wait for price to actually come back to your desired area. Okay. So that one will be for you to actually enter around after it breaks out. As you can see, after it breaks out and then came back to the downside down here, and then the first white candle to close, which is this. But you can see that that was going to give you an aggressive, very bad risk to reward ratio. As you can see, if you were taking a buy around this particular point and hiding your stop there, that was going to give you a bad risk to reward. Even if you're targeting that, you can see that that will be a very bad trade. So you need to actually make sure that your entries are also giving you a good risk to reward ratio, because remember, I am a believer of risk management. Those who've been following me for some time, they know that. So make sure that whenever you take a trade, because it doesn't necessarily mean that that trade is going to work out at the end of the day. So make sure that your risk makes sense, your entries make sense as well. Let's continue. Let's see if we can do one more example. In this case, price is going up. Price is going up. Price is going up. What do we have to do? We need, that is very, very aggressive. So what you can do, you can say that I'm on H1. What you can do, you can use a different time frame higher to identify these structures, okay? To identify these structures, and you move to a lower time frame to find your entry. So let's just use H4. And then on H4, if it creates a new high, a new low rather, there we go. If we move that trend line, that's a cool trend line there. There it goes, moving towards the trend line. It finally broke out, but it broke out from an extreme high. This is a little bit high, okay? And if we were to look at the structure around, this is where the structure would be, okay? This is where the structure will be, that particular pushing. That is the support area. As you can see, price bounced, came back again, so we can mark that. So in order for us to trade this, because think about it, for the aggressive buyers, if you buy here look at how big your stop loss is going to be, because you need to hide your stop there. So this is not feasible unless if you're targeting those particular highs there. Okay. And one of my students said they cannot afford corrections. So they cannot afford corrections. So if you're one of those people who cannot afford corrections, or you cannot afford to see price moving in a different direction before it moves in profit, because maybe your account is tiny, what you have to do, make sure that your entries are better. And how do you do that? By actually looking for pullbacks. In a case like, you can see that's a pullback. There we go, back to the key area of support. Look at how now it violated that. So there's a shift of structure. We need to change that structure. As soon as price creates new highs, we need to mark new structures. Okay, look at that. So this one is no longer relevant no more. Price broke out. So one might say, but Vindi, why don't we now actually buy, or rather sell this structure from the other side? Why don't we sell this structure from the other side? Now, my thing is, if you want to sell this structure from the other side, then look at how low price will be. You'll actually be selling low. That's what I hate. Okay, that's what I hate. You could do that, but that could be a very short term sort of a sort of a trade. Okay, so moving forward, let's see if we can get a close higher. There we go. So this close higher, if you pay attention, this could be a nice validated area. Okay, let's see if we can go to H1 and find that. There we go. All right, then I can mark a different trend line to capitalize on. There we go. Let's see the first white candle to close, because this is a breakout and a what, and a retest of some sort. The first bullish candle to close, that will do. Okay, so if this is our marked areas of support, so of course that's the first bullish candle to close after a retest. One might look for a much deeper pullbacks. Deeper pullbacks are the best, but in the case whereby you cannot wait for that, just more that and more that. That's still a much better risk to reward ratio if you're targeting those particular highs. The stop loss should always be on the other side. Okay, but for those who are conservative, they'll wait for price to come back down a little bit. Okay, so let's see how it goes. As soon as it reaches halfway of that, okay, so you can see how it's coming back to retest. So this is what I meant by deep retracement. So for those who will be waiting for it to come back low, they will have placed their entry much lower compared to that. Okay, so you can see how waiting for deep retracement helps, because now we are there in the losing position. Okay, so whenever you take a trade, obviously you should be neutral. You cannot expect your trades to always move in your favor. Okay, look at how that is playing around. Something went wrong. Okay, sorry about that. And look at that. And as soon as it hits that stop, the way it's hesitating, as soon as it hits that stop, we're most likely to see it creating new extreme highs. Okay, so you can see how it's still hesitating around the same area. Look at that. It doesn't want to go to the stop level, because look at where the stop loss is. The stop loss is potentially placed where? Below this area of support. So of course price is finding rejections, found a nice rejection, and it's failing to do that. Okay, so it's creating like that sort of a consolidation around that area. So that is why I said it's very important to place your stops nicely so that you are protected. But that does not necessarily mean that you're not going to get stopped out. Okay, you're going to get stopped out no matter how your stop losses are placed. That's part of trading. Unfortunately, there's no other way of putting it, because the people who will come or inbox me and say, hey, I always get stopped out. How can I alter that to get 100% wins? And then I'm like, okay, stop trading if you want 100% wins. Wabona riding, just stop trading, because there's no such. Okay, but you need to be patient. Look at that, where the stop was placed. Now you can see that these have moved the same risk as that. So what do? You take part of your profits, or 50% of your profits, and then what do you do now? You move your stop to entry. Why are you moving your stop to entry? So that if price was to go back down, you do not lose that. So this becomes a risk-free trade. All right, I hope it makes sense. So you can see how it created. So there's a potential that it will come back to this particular area. Okay, so this, as you can see that now your stop is at entry. As soon as it closes above this, you can actually move your stop up here. I'm also showing you how to actually manage this. Okay, so you can see that it's coming back, it's coming back, it's coming back, just like that, until it hits your stop at entry, and that will be game over for that particular trade. And what you do for the next trade, you can go back and find out on H4 as to what price is doing. Look at what price is doing on H4 if we extend this trend line that we had. Okay, so you can see if we extend this trend line that we had, price broke out, came back in, and it's creating some sort of a V. I think I've taught about the V before. If you'd like me to teach about that, please let me know in the comment down here, and hit the like if you're liking this sort of back chest. Okay, so you can see this trend line was broken. What do we do if you were to enter here or to use H4? You'll wait for a pullback. A pullback, it's nothing but a move back to the broken structure. Okay, one might say, but Vindi, this one was a nice pullback. Why didn't we take a trade? Remember, we had the other trade, so it doesn't matter. Okay, so if we're back testing the same, if it comes back there, the first candle to close above that trend line, there we go, that's a nice white candle there. So if one wanted to take that one, a long trade, you'll just go long, hide your stop loss behind that structure, and then you target this. You can target this one, but you can see the risk ratio is just gonna be bad if you're doing this. Okay, so the minimum risk to reward should be 1:2. Okay, should be 1:2. So if we are looking at that, let's go. Let's see. As soon as it hits 1, we move our stop to break even. Okay. As soon as it hits 1, there we go. It's going for the stop. It's going for the stop. So stop placement, stop loss placement is very important, guys. Very, very important. I see a lot of people who have a fixed stop loss, and I've addressed this a lot in the private classes, that you cannot say, I'm always going to use a 15 pip stop. You're going to suffer huge losses because these setups are actually different. Okay, they are very, very different. There we go. So if you look at this, this will have been your 1:1. You will have moved your stop a little bit higher. But if you were a conservative one, okay, there we go. There we go. That's a 1:1. That, what do we do now? We move our stop loss to entry. Okay, so stop placement is very important. Don't put tight stops. Make sure that you are looking at a good entry, you are looking at a good stop, and you're looking at a good risk to reward. Okay, so if we move, continue high, your stop is at entry. That's a stop hit. Your stop loss was hit at entry there. Okay, stop loss hit at entry. That's done for the trade. That's it, game over. All right, so I hope you enjoyed this video. If you did, give it a like. So that's some of the things that you should do. So just to highlight what I've done: stop loss placement, that's important. Number 2, entry, your entries, that's very important, and also your risk to reward at the end of the day. So make sure that you adjust those things. See if you can maybe see a little bit of a difference in the next two couple of weeks. Do back test and also forward test these things. Don't just watch a video and say, oh, I'm gonna do this as the market opens, I'm just gonna take trades. But try to see so that you can gain confidence on these particular things. Stop loss placement, number 1, your entries, whether they're aggressive or not. And lastly, the most important thing, your risk to reward ratio. Very important. Make sure that your trades have a better risk to reward ratio. Number 4, obviously your trade management. How do you manage your profits as price moves in your direction? You have seen that I only moved a stop loss once price have moved a certain fraction or a certain portion in our favor. Okay, so that is something that you actually have to do in order to be at break even and not have significant losses, because sometimes you find that you have trades that are moving, the direction is correct, but what was missing, you find that your entries was wrong, your trade management was not on key, your risk management was not on key. If you like this video, once more, hit the subscribe and don't forget to share with your friends. Let's get to 5,000 subscribers, and that will be super cool. Otherwise, sharp.